Good morning, traders. Happy Sunday, everybody. We're letting everyone in. We're gonna give it just a minute or two and let everyone get with us. Good morning to you, Stephen, and happy New Year. Good morning, Michael. Good to see you both. Good to see everybody. Whew. Oh my God, we have such an amazing. It's New Year's Eve. Our crew is here. We're gonna wrap this year up the right way. Start next year in a good place. How's everybody feeling? Anyone have big plans? My plans are to fall asleep by 10:30. We'll probably be up late just making sure our kids get home okay, but other than that. All right, we have a good crew. Let's just dive in. Welcome to the Market Watch Group weekly market prep final session of 2023. Good year. I hope everyone had a good trading year. Like now we gotta reconcile the year and figure out how many trades we had and what was our expectancy for the year. How did everything look? What are we gonna do better next year? Set some resolutions and really define what we're gonna do. Good morning, Perry. Good to see you. Let's dive right in. Here's the disclaimers. Here is the agenda. Stephen put comments on Discord. I I gotta check to make sure mine is connected because I didn't see like the indicator that said someone commented. So thank you for commenting on that. I'm gonna check and make sure that mine is up and running. Here's what we're doing today. Market posture. That's my New Year's resolution. I am going to push to make that. Remember that alerts. We're starting alerts. Fully fleshed out trades that have still some flexibility for you to right say, oh, maybe I'm going to do a spread this time, or you'll have the ability to alter it, but take the basic parameters of the trade. And so that's all going to be done through Discord. So if you're not on there, if you're not, put it on your phone, put it on your laptop, put it on your desktop, little alerts will pop up. Hey, there's a trade. You want to look into it? Sometimes the trades may not be triggered yet. Sometimes it may be if it crosses this threshold, bam, the buyers have done enough. We're convinced. Now we can move forward with it. So that's coming. So Discord's going to be a big part of 2024. Today we're going to market posture. Last time we're going to look at the economic calendar to start next week. I'll give you a preview. It's first week of the month, so it's going to be primarily about employment data. Sector searching, maybe. I mean, right now, I don't feel like my list is lacking. I will show you something with searching, however. There's a couple of things that I just wanted to point out now that we're in the market that we're in that I think will be helpful for you going forward to just confirm sometimes your posture, um, to confirm what it is and to validate what it is that we do in regards to sectors and how we use them to guide our watch list and to really follow the money, essentially. We'll look to see what looks tradable. Remember, we're taking tomorrow off, and then we will meet Tuesday morning for our weekly market open. It will be the same link as the Monday link. So just the weekly market open link is the link. So when Mondays are closed, we'll go on Tuesdays using that link. And trading plan section of the week. Yes, we're starting with section 1. We took last week off. I hope your trading plan is significantly stronger and better than it's ever been. That's my hope as of now. There's no reason to stop, right? I talk about the concept of Kaizen, and it was very interesting. I saw a video that said the video called it continuous improvement, constant improvement, whatever you want to call it. It's all about uh, growth mindset. But it was looking at pit stops. I don't know. I don't think it was NASCAR. I think it was maybe Formula One, like the really huge tires. And anyway, and they looked at a pit stop in 1990, took 9 seconds. 9 seconds, right? To take these four tires off, put four new tires on. And then by 2000, it was down to 7 seconds. And then by 2011, it was down to 4 seconds. And then by 2020, it was down to like 1.9. And then 2023, 1.75. Like still pushing. It's insane. Like you're like, how could they possibly change four tires in under 2 seconds? You gotta watch the video. I'll try to find the link and I'll put it in Discord because it's amazing. And it's like that. That's what we're trying to do. You can't do that by accident. Every single step of every single part of that process clearly has gone into that 30-year improvement. Great. That's what we're doing. So, yes, back to section 1. Let's keep pushing. And here we go. Off and running. We ended with a bit of a selling day on Friday. And the S&P regained quite a bit, only ended up down 0.28. The Dow only ended up down 0.05. NASDAQ 0.5%. The Russell took it on the chin a little bit. That's okay. That's okay, right? It's a weird week. You never know what you're going to get. We'll try a couple things. If you tried something, you probably tried it in financials. Maybe you squeezed some gains out. Maybe you are still in, decided to ride through. Stock car racing with the Crew 4. And I think now they have more because now they have guys up front who kind of like, they just sort of pop the car up and it's amazing. I'll find it. It's fascinating, but yeah, very cool stuff. Okay. First things first, let's posture. First things first. Here's my other New Year's resolution. I'm going to implement Steven's spreadsheet with the macro. Steven and I are going to collaborate. It's been hard. The holidays have thrown me off because I had family in town for a while, and then now my kids are in town. And so it's just my spare time has been hardly any. But first kid goes back to college a week from now. The next one, two more days later, and then all of a sudden my life is free and clear again. 12/31, love it. Here we go. 12/31. We're coming in strong, strongest we've seen. Strong and staying strong. We were a 6, then a 6.5, then a 6.5. I said it could go either way. I mean, I thought on last week, if you were there, I thought it could have been. Is anyone higher than me? Out of curiosity, does anybody have higher than a 6.5? Let me know if you do. But I said arguably we could be a 7 in a couple of, if you looked at a couple of things just slightly more aggressively at all. I didn't feel like we needed to. We're already at a strong place, but what I think is it could certainly come into play now. One thing goes up, one thing goes down. Okay, it doesn't look like anyone is. But yeah, when you get this bullish, you almost find yourself easing into a little bit more like, hey, relax, right? Well, we don't have to. If you're big stacks at the table, you don't have to push. You're big stacks. Let the action come to you. If you're a poker player, you know what I mean. All right, let's pop in. What's first? There was a problem detected. No. Okay. I was like, I just checked this 15 minutes ago. How could there possibly be a problem? All right. Let's pull back to the 3-year weekly. Just grinding along at the top. And that you can see, you can grind here. It got to the top and then went a couple more weeks, then had a little bit of a consolidation. We could see something like that. Let me get my drawing tools to just sort of highlight this stuff. So here, right, a little bit of a grind, and then we had a consolidation and then another nice little move. Here, we grind, and then we pushed a little more, then we had a consolidation. Now, that did ultimately put us in this place where we've had that failure, that lower high, which by that point in time, we had already dropped our market posture and tried to put ourselves in a position to not get hurt by this. And that's important. But I don't want you to look back and be like, how come I didn't capitalize bearishly? That wasn't our thought process. We were bullish, right? We were bullish. And so in this situation here, we try to protect ourselves by hedging, maybe a little bit of speculative as it continues. If you remember right through here, we were like, okay, we're about to start getting actual bearish now. Actual bearish now. And what I want you to think about, I'm going to change my color here. This here is actually quite similar to this here in size, in scope, in what it did, right? It kind of, it had a lower high into this context, just like we did right here, right? What's the difference? Over here, the posture kept getting worse, and we turned into a bear market, which is why, right here, we didn't turn bearish. We were about to, if you remember. We got to a negative point. Part of what I want to do today is just sort of validate some of what it is we do with our market posture so you can see how it works and be like, oh, okay. The same thing. We were very bullish coming into this new 2022 action back there, right? And then all of a sudden, when things just started to deteriorate, they continue to deteriorate, but ours didn't, right? You can see that right there, this little kickstart, you actually had something very similar to that right there. Whoops, where's my line? Right here. But this one failed, rolled over, and then sold off. This one kept going. Those two conditions look almost completely identical. One turns around and all of a sudden we're a 6. The other one went down and all of a sudden you're a -3, -4. And it's, yeah, you're trading bear here. We should be back in 2022. You should be thinking, why did were you trading bullishly? They shouldn't have been, obviously. Did we capitalize on the bearish markets? Did we ever find a way to catch a piece of some of these extended runs here where it's like, hey, you know what? If my market posture in these 4 or 5 weeks improves enough, we're going to try to take some runs at stuff like that, right? Remember, each of these is 4 or 5 weeks. So, all right. So what's the score for now? Same score. Same score. Now, Michael says the stochastics. Remember, stochastics is last. Yes, it does look like it's pointing down. You know what else that looked like it was pointing down? Right there. It was overbought. It rolled over. But what did it do? It went sideways and then the market took off. And when the market took off, we were overbought the whole time. The whole time. So this thing could come down with this going sideways. And then it could go like this. And this thing could just take off again. And it would be overbought the whole time. Stochastics is the last 3 to 5% of what I'm doing. The last 3 to 5%. So I can't think market's turning over now because of the weekly stochastics. I'm going to be let price prevail. Price will override any oscillator. I mean, and I absolutely agree with you, Michael. It very well could. We might see one of these little consolidations where we get, late. Maybe we see something that pulls back like this for a few weeks and then ready to go again. Okay, great. If we do see that, obviously we're hopefully have eased up and we're just kind of riding. We already said that the potential for triggering a hedge is great. It's high right now. It's already high. So, yeah. All right, let's keep talking about it. So that's going to stay the same for me. I'm still a 1. Still looks pretty good overall. Let's pop down to 6 months daily. Now, we technically got a new high. I mean, last week we only had 4 days. 1, 2, 3, 4, and it technically got to a new high. I'm not counting that. The high here was 475.90. The high here was 470. We were $1.50 higher. It's barely 1/3% higher than this high was. But it's certainly not negative by any stretch, right? There was more buyers than sellers. The volume was strange on Friday, right? Did you guys notice that? We finished slightly down, but the fact that the shadows came back up, I don't know that I think I'm going to call that a wash day. I mean, we really hardly dropped at all. So, but it was weird to see that much volume coming in on that last Friday. Maybe just a bit of last minute institutional shifting. People, Steven said, people taking profit to pay for Christmas. They're like, oh, they saw their credit card bill. No. Yeah, I mean, you never know what it could. I mean, that was the last chance to take losses, take gains. I've asked this before, but to what degree does end of year profit taking and or tax losses for tax purposes play? Well, keep in mind that a lot of institutions work off of a fiscal year that ends in September. And so they're more inclined to look at it for, accounting purposes than they are tax and tax loss purposes. But you can see one day we finished with one weird day. It wasn't much, right? That's the impact. We just saw what the last week of the year can look like. We had 3 days of below average volume and it just kind of crept a little higher. Why? Well, because it's the tendency is to coast, and coast means whatever direction you were going. Well, we've been going up. If you look at the end of year, let's go back 2 years. Nope, let's go 2 years back. And here is, we'll give it the last 6 months. So we'll go like July. Let's look at that. So over here, the last week of the year, we had been coming down into this and it just sort of coasted along. Here's the last, let's see, right there. 1, 2, 3, 4. Down, down, up, sideways. Never had above average volume. That's the last week of the year. There was a little bit back in here, but yeah, we were already past that. So it's not that big, right? It's not that big. There's some impact because clearly people are, trying to do something, whether it's take a loss or take a gain to offset a loss or whatever it is. There's a bit of that, but really not much. And there's not much impact. And if we went back even another year, we'd probably see the same kind of a thing. So yeah, I'm not too worried about that. Okay, but the short term, I'm going to keep it the way it is. What I'm wondering is, are we going to see a consolidation? Right now, it feels like the lines we're trying to find maybe will exist through here. That's tight. That's what I feel like that's a tight trend range. I would maybe think that if we pull back like this and then turn, that we may redraw and end up like let me change the color on those. That's a little confusing. We may end up redrawing this to look like this. Nope. Which is a little broader and still a pretty good score. But in that regard, I would say that's more like 1.5. It's steadier. Right now, though, when you look at what we have drawn, that's the most recent trend. Yeah, that's pretty good. That looks like about a 1.75 ish. That's where we are, I believe. 1.75. Yeah. Yeah, I think we're in a good spot with this as of now, but it doesn't feel like it's really cemented yet. Like we'll see what the next selling cycle gives us. It seems like we're moving into that next selling cycle. Do the sellers actually come in and push it? Yeah. So as of right now, though, those first two are pretty stable, I want you to notice. Michael says, again, look at your stochastics. That's 2. Now, but remember, what we're doing now is market posture. Market posture, the score only accounts for trend. If you're talking about trading posture, if you go to your section 2 of your section 2 of your trading plan, we talk about what's the difference? Well, market posture is the underlying. We don't care about where it is relative to the trend. We just care about what's the trend. So I can't let my trading posture influence my market posture from a scoring standpoint. When we're done and we're like, hey, I'm a 6. Well, because I'm a 6 doesn't mean I go slap bullish trades on, right? The 6 says I'm bullish. If I'm looking for anything, I'm looking for bullish trades. I would expect the seller cycle not to be very long, so I'm not going to waste my time trying to play the other side. If I try to play the other side, it's going to be through time spreads where they become delta negative, which means they are playing the other side, right? And so that will happen organically. When I'm done with my market posture, then we'll talk about our trading posture. And we'll say, great, what are you willing to trade? And that's when Mike will say, I'm a little disinclined to put new positions on because both the short and the long term are overbought. Okay, valid. That's the difference, right? That's what I don't want the day-to-day bleeding into the market posture. I want the market posture to stand alone and create the umbrella that we put ourselves under to then say, now how do I do my day-to-day? So if they're both overbought, then that might be like, hey, let's relax, wait for the market to pull back, dip a little, and then we buy it. Find a bull market, buy the dips. So it's valid what you're saying, Michael, 100%, but it's not going to impact my score. I'm not going to be like, you know what, I'm going to move this down to a wrong spreadsheet. I'm not going to move this down because it's overbought, because I know that overbought can stay overbought and get more overbought, because this is only to measure the trend. That's it. As long as the trend stays good. Now, are there times where at the support level of the trend and we're much more inclined to trade bullishly, and times when we're more at the resistance level of the trend and we're less inclined? Yes, of course. Absolutely. 100%. But that's the distinction. Okay, volume. Let's go to volume and keep throwing comments and questions. I feel like that's what really gets us to our best discussions and our little, epiphanies that come our way during those discussions. Volume. Volume's been an interesting one. It's surprised me a couple of times. I've got 2 volume days here. I don't know what the previous was, but I'm going to assume because this was positive, it was bullish. So I'm going to give both of those credit. This one here was not. Oh no, I think it actually was. That's the one that I go back and forth on. I'm going to come back to that. If anyone remembers what I've been doing with that, tell me. I know that sounds terrible. I've got these here. I've got these here. Yeah, such a weird volume profile right now. Okay, let's give the obvious ones. Point, 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 point. Those are obvious. Also obvious. That's also obvious. And this one is also obvious. The not so obvious ones are, for me, I don't know. This one. We're going to vote on that one. This one. And this. Okay, so without those, we have 1, 2, 3, 4, 5 to 2. 5 to 2. If we include, if I did this one, this would be a check. This would be an X. This would be an X, which would make it 6 to 4. What's the thought process here? Well, this one is a white candle, but it did come down. And the volume, we said 5%. So this one here is 72 million versus 68. So that's about 4 million. And we said 5% or more. 5% or more, we count it. So I'm going to count that one. So that gets it. This one here, we went up. So here's what I would say. Either we take both of these or we discount both of these. So that means we're either a 5 to 3 or a 6 to 4. So if we kept both this one and this one, because they're about the same level up and the same level down, then we'd be a 6-4. If we don't, then we're a 5-3. I mean, that's basically the same thing. And you'll notice that we've lost a little. There's still more buyers than sellers, and we always give the buyers a little more credence, but it's not overwhelming it. So I am going to drop my score from, keep doing that, sorry. I am going to drop mine from a 0.75 to a 0.5. It's still buyers in charge, right? It's still buyers. The buyers are still holding them back, but the sellers are there. We can't act like we don't see them, right? So we have to, I'm going to lower my score to a 0.5. That's my thought. And then next week, there's a very good chance it drops again. Why? Because we're losing 2 days. We're losing 2 days. So then all of a sudden it's 3 to 3, right? It's 3 to 3. And if anyone gets an above average volume day next week, it could tilt it one way or the other. At 3 to 3, I'd probably still just drop it. Confused about which part. The sellers were less than, yeah. And we're scoring at a 0.5. That's bullish, right? When we were at 0.75, it was 5 or 6 buying days and only 1 selling day, right? Now it's 5 to 3. So what's happened? The sellers added more days while the buyers didn't. There's still more buyer days than seller days, but it's not at a 0.75. Now it's only at a 0.5. And if next week, let's say this week we get 1 volume day, right? 1. If we get 1 volume day, then it's going to be 5 to 4. And at 5 to 4, I'm going to drop it to a 0.25. Remember that volume is not required for us to maintain our bullishness. If you remember, there were many times I said, as these scores improve, this score is going to fall to 0. There's going to come a time where there's no volume. Meaning, but we don't need it. At that point, the trend prevails as far as this goes. How does that relate to overall volume? You mean like just like average volume on the mark? I really don't even look at that, right? I really, and that's why I look at a 20-day average. It's just because I'm only interested in seeing when there's increased conviction. That's it. That's all I care about. Increased conviction. Because here's the thing, right? If I was a 7-0, 7 buyers, 0 selling days, that's a 1. we were like a 5-1, right? That was 0.75. I can't score a 5-3 the same as I score a 5-1, right? Yes, there's more of these than there are of these. But this is now 0.75 or 0.5. And if next week it's 4-3, am I going to score a 4-3 buying days to selling days the same as a 0.5? No, it's going to go 0.25. What's happening? I still have more buyers than sellers, but not to the ratio, right? Does that make sense? The greater the ratio of buying days to selling days, the higher the score. And if the ratio inverts and all of a sudden we're 3 buying days to 4 selling days, then it goes to a minus 0.25 because now it's inverted, right? Yeah, and if you're not clear, go watch that video on the volume again, because that's what we're looking at is who's got more conviction relative to each other. This one's still getting you. Got it? Keep asking questions. Hopefully that makes more sense as we go through. But remember, we dropped it, but it's not negative. It's just less bullish, right? That's how you want to consider it. It's now less bullish as a contributor, as a characteristic. Major market analysis. Let's hit it. Where are you? Let me show you one thing for sectors real fast. This is a heat map for the year to date. Now, if you were to go back since we started in late April, what's the number one sector we've had on our watch list? Technology. What's number 2? Communication services. What's number 3? Consumer cyclical. What's number 4 and 5? Financial and industrials. Where's the money? You can see we've been on it the whole time. We don't get distracted by consumer defensive. If we do, what stocks? Oh, look, Walmart and Costco, both on our list. So if we're going to choose something from there, we're going to choose the strength, right? We don't get distracted by utilities, real estate, healthcare. Basic materials had some strength, but there you go. So this just sort of is at the end of the year, when you look back, you want to be like, hey, did I trade where all the green was? Yes. 100%, right? Now, of course, Microsoft, Apple, Google, Amazon. I feel like we should put, is this Broadcom, AVGO? Broadcom, we should throw that on. Those are always on our list. Steven says real estate should improve with interest rates declining. Absolutely. I would concur with that. There may be some great opportunities if anyone is managing a retirement portfolio looking for income producers. REITs might have they tend to pay pretty good dividend, but if the market's dropping, that's not helpful. You're working against yourself. But if now that things have possibly set up, there definitely could be some opportunity there. But yeah, great. Let's pat ourselves on the back. We were where the money was the whole time. I feel good about, and in the right proportion. Right? We definitely were concentrated on technology first and foremost, and communication services just slightly behind that. And then the other 3 rotated around a little bit between cyclical, between financial, and between industrials. So there you go. And that's what we're looking to continue doing in the next year. Okay. Major market. We know that the Russell's made a huge surge. You can see that it has jumped even on the 200-day now. It passed the Dow for a minute. Friday didn't help. It dropped back down, but it caught up. That's what we've been seeing. That's what we've been wondering if we're going to score. Is participation by the small caps. Look at this on the 133. On the 133, where we have real nice parity between all 3 markets. All of a sudden, the Russell has made a surge. When we go to the 66 now, and we say, okay, what's happening? The NASDAQ and the Russell have both moved into leading positions. The Dow and the S&P a little bit behind. There's no one lagging right now. As we've come out of our September, October, it wasn't a correction. It was a consolidation. It never, well, okay, that's not true. The NASDAQ and the Russell, I believe, did hit corrective territory. They did drop 10%. The S&P did not. And that tends to be our primary watermark. So yeah, this looks great. Our score right now, 0.5. For me, this is now a 0.75. This has gone up. We now have on multiple time frames. We had catch-ups on the first two time frames where the Russell's catching up. On the third time frame, it jumped into a leading position. Pulled back a little, but this is what we want to see. NASDAQ and Russell in leading positions. Let's go to the 22 to confirm. And interesting that the Dow popped a little bit. Yeah, but look at the Russell. So strong. So very strong. And that's something that we've been waiting to see if we're going to have that participate. I'm going to go ahead and put that up a quarter of a point. So I gained one on major market, lost one on the volume, right? So yeah, well, the score is going to, as of now, it's the same. We'll see what happens. Sector rotation, I can't see it dropping. We still see so much strength in the right sector, so I think that's going to stay the same. VIX, we'll see. We'll see. But yeah, I think, what does this mean? Well, first of all, it's very difficult to have a market putting out a higher than 6 score. Very difficult. We hadn't seen it all year. This is the first time. So am I expecting that this is going to continue meandering up towards 10? No, not at all. Am I content for this to just sit around in the 6s? Hell yes. This is everything we need. What do we have? We have 5 sectors in place. We have low volatility in the market. I mean, that's it, right? We have buyers in control. As long as it stays like this, great. Feel good about that. In fact, if we have a little bit of a consolidation, it might drop to the 5s. I'm still not going to be like, oh no, it dropped. Be like, yeah, 5's pretty strong still, right? So when we consolidate, there will be signs that look like weakness, but overall, this is fabulous. Okay, let's go on to the VIX score. Let me ease this back. And VIX. We bumped major market last week for the same reason. Yeah, for the Russell, absolutely. That's what's bumping it again. Increased Russell strength. That's what's bumping it again, right? You'll notice if you look back, that's what we've been waiting for. So during the October consolidation, there was a little back and forth between the Dow and the NASDAQ. And then the NASDAQ finally sort of pulled ahead and prevailed. And then all of a sudden the Russell started to participate, because as we move forward with these multiple time frames, we're dropping other information off at the back end. Each time frame is adding and dropping at different rates, and it allows us to see it. So it's the same, but in a greater fashion. 2 weeks ago, when you looked at the 200-day or the 133-day, that you didn't see as much of a catch up. The Russell was still trying to catch up. Now it's caught up on those time frames and leading at the 66, because as it sheds old data and adds new, that's what allows this analysis to stay relevant. So if we continue to see Russell and NASDAQ the same, if we continue to see the NASDAQ and the Russell leading on multiple time frames, we would ultimately raise the score one more time to a 1. That's as high as it gets. So if you look, it's very similar. our sector rotation, we got to a 1. And what does it do? It can only drop from here, right? It can only drop from here. So yes, we could raise it one more time. You know, and if you remember, it took me some convincing to get there. VIX, last component. Last component. There's no change for me. We dropped it when it technically took out this high. We dropped our score a quarter of a point, but this is low and staying low. This is definitely for me a 1.5. Now, if from here, if this came up a couple of days and then turned over and we got a lower high, that's back to a 1.75. And if we come down here and we get below this, that's what it would take for this to get to a 2, right? That's as good as it'll get. But we have to recognize we're not going to look ahead at that. And in fact, right now, what we're looking at, this is where I said, remember the hedge. This is our current low right through here. And again, right, I'm not going to anticipate this in order to score this, but my stochastics is low. And we could see this turn. And if on Monday we see this go like that, well, that makes this a higher low than this one. And that's where I will hedge. It's automatic. This is, sometimes people are like, oh, does that mean you're bearish? I'm hedging bullish trades, not bearish, concerned. That's concerning. So when I buy puts on the SPY this week, if this happens, first of all, I have now carried more and have more than for a while. So there's a number of bullish trades. Everybody else the same? Are you trading more? Are you trading more bullishly? Have you had more positions on? Give me a sense of your trading activity levels. I want to know if I'm right that you're, taking increased action with your stronger market posture score. But as such, that makes the hedges more important to us. So yeah, I told you, the more bullish I get, the more bullish I trade, the more I'm going to be thinking, ooh, what if this thing grinds to a halt? What if all of a sudden something catches me off guard? Because we do have, you can see, a little bit of escalation. This does not tend to escalate in a channel. It escalates in a triangle, right? If you look back here, we don't escalate like this. We escalate like this. So my concern is that if we pop up and then do this, that's how we get up. When things get bad, it goes bad quickly. And so if you're over here like, how could I have seen this? Well, that's what we're looking for this week. I will absolutely be talking about that with you, and I will we'll talk about it on Monday. If on Monday we see this thing like this, we're going to say, hey, if this closes at or near this high, that's it. Trade on. I'll be managing my bullish trade still, but absolutely we have to be ready for that hedge. And remember, one of your end of year activities should be to go identify every single hedge trade you took and were you profitable on your hedges. Two things: if you're profitable on your hedges and profitable on your account, that's the objective. Well done. If you're break even on your hedges, profitable on your account, that's fine. We can live with that. I would still want to push to be better with hedging, because I think you can be both, but we could live with that. If you're slightly profitable on your trading and you're slightly behind on your hedging, that's a problem. That's where we've got to be like, okay, let's fix this. That's the data tells me it's problematic. Okay, so that stays unchanged. And we are now for the third week in a row at 6.5. So we're strong and we're staying strong. Strong and staying strong. That's how I see it. Watch list looks great. Let's go through it. Apple. I took part of my loss. Anybody in this? I took part of it. I carried some of it. I'm thinking we might still pop out of this, and I don't want bury the whole thing because I have not broken support. This is still at the same support level, right? I was able to take a very small loss on a portion of it because I did take an anticipatory. I got in at a good place. But let me know if you're in this one because I wouldn't be surprised, or if you kept it. But I did capitulate and take a little off and just make it a little easier. So if this thing turns around, I'll be fine. I might even look to add the piece I took off back in. Aflac and AIG, I avoided these this time, but they've done okay. So if you took them, you're probably in an okay spot. AMD was a good one, but it looks like it's coming to an end. If you were in it, I would expect you at least closed some of it. Some of it, maybe carrying some of it, but I wouldn't be surprised if you closed all of it. Amazon. I saw Amazon in consolidation the whole time, right? It was kind of grinding sideways and this was coming down. Now a little more so. So yeah, this looks a little more traditional in its consolidation. I think a great place would be this old resistance. So, 148. See if it comes down to there and finds some support and looks to turn. I would put Amazon on my list for this week. AXP. So the financials, they kind of moved, but not by much, and they're kind of stalling. They still look very bullish. Here's what I would say. I am not looking at this as my low, so that if this were to pull back and get down, let's say to this level through here, I'm not going to be like, well, we broke the old low. This is a little more fluid to me because it was just the one day. And because I don't tend to trade those on the way up, I don't really count them on the way down. Because a lot of times when I see something go break a low, I'm like, I'm not as interested. Now I see it as more consolidative. But in these financials, that's not the case. I absolutely see this as one strong move. And now if we have a consolidation, there's going to be plenty of opportunity still in the financial sector. That's how I see it. But does look like it's hitting some resistance, right? It does look like if you took some of these trades, it just sort of meandered. Maybe it's going to keep going, maybe not. Boeing. Boeing looks great. Great looking stock. That's your consolidation. Sellers haven't done much as they've had the control. So I'm definitely looking to trade coming out of this into whatever's next. This is on my list for sure. I should probably write these down so I don't have to go through my list again for the email. Hold on one second. Let me get a paper here. Okay. So we've said we like Amazon. I like Boeing. I still think Apple is at support, so I'm going to keep it on my list. Let's keep going through them. BK, this is very similar, right? So I don't see the financials as new trades. If you took something from back here, and I have to imagine some of you did as this turned, it's moved, but it hasn't moved very fast, right? So maybe you're holding on to a little bit of money. Maybe I think that there's still a chance that these pop one more time or that they could come back. So if they start to come back, watch out. Now, some of these are. I don't want to see this break this low. I want to see it come down and go again and then see if it can take off. So we'll see, but I am bullish on it. BLDR is industrials. It had a very similar, right? Very, very similar. This is one that I did take through here, closed on Thursday. Didn't even hold to Friday because I had this engulfing candle here. It did okay. Just barely got at it again. This is an old stock I traded quite a bit back in the summer. BLK gave a signal, moved a little, seems to be stalling a little. So yeah, we're going to watch financials very closely this week. BX looks exactly the same. Could you have squeezed some money out of these? Yes. Could you still be holding some of these? Yes. Citigroup, very much the same. Earnings are not far now, remember. This is kind of the start, January the 12th. So not next week. When is January the 12th? A week from Tuesday. You've got about a week, almost 2 weeks. And then earnings season kicks into gear, and we're gonna have to be mindful of that. Caterpillar looks like it could be setting up as well. I still like Boeing a little bit better. Capital One financials, very similar there. COP, I have this on my list. Oil has had a little bit of a surge. Now, if this thing holds up at a higher low, I would say maybe halfway on this big candle, 114. It doesn't have to hold the 50 because it barely got through the 50. You can see that it could come back down below the 50 and then have a great bounce and launch a great move. That's what I'm looking for. Does it come down and make a higher low? I will look to put an oil trade on just based on some of the surges we've seen in energy prices. Costco pulling back. I like Costco. CPRT looks like it's in a bit of a triangle here. Looks a lot like financials and also BLDR, where it's moved a little. Could you have held on to, could you have booked some profits? Probably very minor profits. Maybe it would be small. I don't know. Maybe it'd be break even. Is there still possibility for this thing to move forward this next week? I would say yes. CrowdStrike looks great. Love technology right now. Love some of these software right now. This looks fantastic. Just waiting for the next surge, the next turn. CSX, I like CSX, industrials, railroads, that looks pretty good. Delta, Michael said he has a piece of Delta. Yeah. It turned, and then it just sort of meandered. Here's the thing. It hasn't broken support. This signal is still viable because it hasn't broken support. Is it hurting from time? Yes. Is it still viable if it turns off of 40 a second time? 100% yes. For me, yes. DIA, viable. Or DHI and DIA. ENVX, okay. We're at a line in the sand now. As of now, it still looks like a consolidation. If it breaks the 50 and this lasts much longer, then I start thinking that's a sell-off. Right now, it still looks like a consolidation. We seem to be in a good place to try to maybe catch this on its next move. If it bounces again, I think it's heading up towards 18. That's the next level up here, right? I think as long as it gets through this area, 15. Yeah, I like ENVX. Fastenal, great looking stock in consolidation. I definitely want to trade this out of this consolidation. FLR, a little more iffy. Gold looks like it's flagging. Still looks bullish, right? Can't argue that it still looks bullish. Google looks fantastic. Just had a great run on Google. Would love another chance at Google. It's in consolidation, and look at the sellers. Haven't done hardly anything, no volume. Home Depot, I still like Home Depot as a consumer cyclical retail possibility. IBM. Okay, so I held. Anyone else? It was one day, it was light volume. If it can stay above yesterday, I'll be okay with it trailing slightly behind, but it's got to go. I'd like to see it open above 164.15. I'd like to see it try to get back up to like 165 at least and just kind of stay underneath this if it can. Steven said he did too. Press said sold mine only because the rest turned red. Got it. I honestly, the argument's there. It turned, it crossed. You know, I understand. It'll be Perry. So a couple of us held, a couple of us sold. That's how it works. That's how this works. I used to do when I had live classes, we'd have like, 20 people. And I'd have everybody take a piece of paper and I'd put a stock up and I'd be like, everybody write down, where do you see support? Where do you see resistance? And then I'd write, support and resistance. And literally I would end up with 18 numbers, 20 people, 18 numbers. It's just perception is everything. So anyways, I like it. We'll keep talking about it. ICE looks overextended, but very strong. That was the financial one right there. That was the best one. Intel flagging looks great. I would imagine those of you in it have probably shut her down. Now that you got your second day plus your cross down here, but a nice catch for sure. And now what? Let's go get the horse some water, feed it, let it rest a little, and get ready to run again. IWM looks great, right? I'm not like, oh, it dropped 1.5%. Yeah, it's more volatile, but look at that strength. I'm fine with this. I would probably even let it fill the gap. As long as this holds up right here for me, I'm going to put this in like maybe like that. If that holds up, you're still well above the 50 for sure. That's very strong. Even if it fills into this gap a little bit, I'm okay with that. The small caps look good. They're setting up the next trade. JP Morgan. I like it, but it's overextended, just like all the financials are. That's one that we looked at, and I think they could go either way. We'll see what Monday brings or Tuesday brings. It'll be interesting. MasterCard, no. Meta, love Meta. Meta, I still have some KKR too, Press. Absolutely. Meta is setting up. I like Meta and Google both. Microsoft, if you're still in your spread trade and time's on your side, this looks just fine. If you bought an option, it's just paper cuts every day, more coming, you know. Netflix, I still think is viable. See what happens there. We still have a great watch list, you guys. NVIDIA, that's a little more iffy. Picard, need a little more pullback. PNC, not yet. The financials will be added this week if they consolidate a little bit. Otherwise, it's a little early for them. A little early for our this one. I would still put Rivian on my list. So I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Got over 15. Roku, I don't like it. Shopify, I took this one, closed on Friday, basically washed out. Break even, love break even. I tried, I had a good reward to risk. Just didn't pan out. SMCI down, Snap. Snap looks like it could go. Huh? Let's keep an eye on Snap. SPY looks okay. STLD, ooh, Steel's dropping. UBS starting to pull back. There's something maybe there. There's our VIX. WFC on the table. Yeah. Steven knows he wants to run that horse again. Walmart. Walmart's back in style, at least. It broke the consolidation. It definitely broke here. And it's got to this new, it broke the old highs. Now what? If it pulls back and gives us something there, fabulous. Fabulous. Snap. So this thing went from 10 to 18. That's an 80% climb. So there's a lot of people out there who just had an 80% gain on this. And then the buyers took a break. Yeah, buyer fatigue, right? They're tired. They just pushed this thing up 80%. Over 100% if you come from even just a month earlier when we were at 8. And now what? Are people like, oh, let's take our profits and get out of here? No. Right? No. They have shit tons of profits and they're keeping them. Because why? Because they're still bullish. So this is just a small, the sellers have the floor. They've had the floor. Now, has this turned? Again, stochastics are not magic. They're not silver bullets. It dropped and it started to turn. This hasn't confirmed with price, but if I get a price candle that looks like this and breaks out of this consolidation and this continues, then I think, okay. You can see here it went sideways for not quite as long, but if you were to take out the volatile parts here, it's about the same. So what I'm saying is the buyers smash and grab this thing. They took a little break because they're tired. And what have the sellers done? Absolutely nothing. The lack of sellers is very easy for buyers to come back in. That's what I see. Now, do I see it good like now? No. Good like as soon as the buyers make their next little push? Yes. Thank you for the question. Like I said, those your guys' questions take us down the best rabbit holes, I think. US Steel, no. So let's just look through the sectors. Basic materials still looks quite strong. Anything you're trading in there, still viable. Communication services, quite strong, starting to consolidate. That's why they're on our list. We have Google, we have Meta, we have Netflix, all on our list. Energy is a maybe. It's a maybe. If it holds up at a higher low, yes. Financial still looks quite strong. Industrial still looks quite strong. Technology still looks quite strong. Great. Right? Great. Normal. Staples looks quite ordinary. We don't want strength in our defensives, but it's not like the defensives are going to go down. They're just going to sort of meander behind. Same with utilities, meandering from behind. Right? I don't see anything there. The only thing I see in an outside of our big five is energy with oil. And that will bring a bit of balance, I think, overall to the mix. That's where I am. Watch list looks great. So yes, I have a few things that I've held that I'm carrying. I have things that are setting up. If the market turns on us and goes a little more bearish, I'll probably take some off, but I'll have plenty of things still setting up, ready to go. I think we'll have a trade window next week. That's what I think. Even on a short week, I think we'll have a trade window. Wednesday, Thursday, I think we'll get signals. So that's what I'm looking for. Give me your thoughts. Let me know what you think about that. An interesting thing to point out. This is the base of our search. The base of our search. 2 million shares of volume, optionable and shortable, over $10 a share, above the 50-day and above the 50 and above the 200. How many stocks do we have? 514. If you remember in October when we ran this, it might have been sub 100, less than 100 stocks qualified. So your searching can validate your market posture. If you're like, hey, I'm really bullish, and then you run a search and you can't find anything, reevaluate your premises or your premise. Does that make sense? So I just wanted to point that out. We don't have a need to search. I don't. Plenty of opportunities, plenty of stocks. If you're finding that you want to trade more than you have stocks for, then go run some searches and buff it up a little bit, because you can find some things in there. And lastly, where's my trading plan? Sorry, let me grab it. Nope. Market watch, docs, trading plan outline. We are starting here at section 1, personal info. This is critical. A lot of people are like, oh, what do I need this for? Because when we get to goals, we're going to look back to strengths and weaknesses, and we're going to say, all right, let's set a goal for every weakness. Whatever weakness you have, we're gonna set it. You could jump to section 8 if you want to and work on it right away, but whatever weakness you have. Now, remember, an easy way to flush out weaknesses is looking at mistakes. If you go look at the top 10 trading mistakes, that's a great one to pull out to start the year. Right? It's sometimes we forget it. Pull out the top 10 trading mistakes doc. It's in the content. No, it's in the welcome doc. There's a link for it if you haven't downloaded it, and you can pull it out and go through those top 10. Which ones did you used to make and you're not making anymore? Well, great. Recognize the improvement. Which ones are you still making? What are you still doing or prone to? And then you take that weakness and you figure out what about you is making you susceptible to that. Now you've found the weakness that leads to the mistake. We're very deliberate. If we're going to improve, right? Somebody figured out how to put a tire on that you could just push on and it's locked in. You don't have to put those. I mean, that's what improved that pit stop for the most part, to really shave the time. Okay. Strengths and weaknesses, commitment and discipline. These are just kind of statements, right? Make a commitment to yourself, whether it's time, whether it's, energy, and figure out how you're going to raise your discipline. If we get the commitment and discipline right, we follow our rules better. I would actually have you go through your log. I hope when you're logging, if you ever break your rules, you make a note of it, because we want to go back and analyze those trades. I've had times where I broke my rules and I had like 2 losses that were bigger in one game that I didn't get because I broke my rules. And then I looked at what those 3 trades cost me for the year. Like, if I hadn't broken my rules, I would have lost less on the losers. I would have made more on the winner. And what would that have done? It's a bit, you want to pull your hair out a little, like you're like, oh my God, it cost me that much. But it also helps you to figure out, how do you maintain your discipline better when you're following your rules? That's the number one thing I've seen over the years, working with traders. I hit my 20th anniversary this year of coaching, mentoring, instructing, working in trading education. 20 years this year. Very exciting. But that's an important thing, is so many times people have plans and then they just don't follow them. It's like, well, that's not helpful, right? We can't improve that. You've randomized your trading. We can't fix random. We can't improve random. We can only improve processes. And processes require discipline. So that's a big one. And then your mission statement and your vision statement. Mission statement, like a business. If you've never written one, Google it. That's what I did the first time I did this. And it basically boils down to, what is your objectives? What are your core beliefs, essentially, right? Like, what are you trying to accomplish? And what about what you're doing in your process is going to help accomplish it? Should be a paragraph at most, 3 sentences. I'll dig mine up and I'll put it, someone remind me on Discord this week, and I'll put my mission statement on. Vision statement's a lot more personal. It's a lot more colorful. The premise is this: I believe that trading, when done correctly, will change your life. Absolutely, 100%. If nothing else, right? Think about when someone retires. Let's say they have a nest egg of $1 million. They retire, and they annuitize it. That $1 million is going to spit out like 38 grand a year from an annuity. And that's your retirement, 38 grand added to your Social Security. A trader who can get 12 to 15%, that's outperforming the market, 12 to 15. I think we can get 20 to 25 a year. Let's say you can get 15% a year. That $1 million now produces 150,000 in income. And if you had $1 million, I would expect that you're doing some naked puts and covered calls and income strategies, while still only speculating with probably 10% of it, right? 100 grand speculation, you're trading 900 grand, you're producing income. You can get, you could make 120 to 150 grand a year and you're not touching principal. That's what we're working towards. Something like that. Can we get to the $1 million faster because we have the ability to trade and improve? That's what we're looking for. And so, sometimes I have people that they want to be professional traders in 3 months. That's not what we're doing. It's not going to happen. I wish I could give you what you need to do that. But I can shave years. I can shave years off of the process and of trial and error of what a lot of us as traders kind of go through. I was still in a bit of trial and error when I first started coaching, to be fair. So yeah, okay. That's section 1. That's how important it is. That's what we're working on this week. Questions, comments, concerns? All right. Well, I want to thank you guys. It's been great. We didn't have a full year, but it's been great. I'm trading crisper and better than I have in years. I 100% attribute it to our group. I'm so very excited for next year as we continue to flesh out this group. And like I said, in the next couple of weeks, we're going to launch the alert service. We're going to put a first iteration out and then gather some feedback and figure out what we can do to improve that. I expect it takes a couple of months to really get it where we feel like it's polished and it is what it's going to be. You guys will be very instrumental in helping to make those determinations. Let's continue to apply our Kaizen mindset to everything that we do, constant improvement. And I look forward to it. So thank you guys. Have a safe and happy new year. Um, Press, ask me about that. Let's have that chat in Discord. We'll talk about that, and I'll put some links and resources. Ask that same question. That's a great. He asked about taxes and investments in trading education. Is that something the IRS honors? We'll talk about that. Happy New Year, everybody. Thanks again. As always, happy trading. I'll see you guys Tuesday.